Hello, everybody. My name is Nicole and I'm a technical analyst and private investor. And today I thought I'd do a slightly different thing with you all. And that I've got you several very short-term charts to see how one would analyze, how I actually did analyze the markets through the important release of US non-farm payroll data on Friday. Now, before we even start looking at a chart, first of all, you've got to know what market consensus is. This time it was quite easy. The number was about 700,000 new jobs created. That's okay, but when the difference between the different forecasts is very, very wide, the impact is quite different on the markets. Secondly, you've got to watch out for revisions to the previous month's data. And here we saw that there were more jobs created in May than had originally been expected. So both numbers were, shall we say, better than expected, i.e. more jobs. Unfortunately, the unemployment rate itself also went up. But let's see how the markets got on with all of this. So my first chart is a 5-minute chart of the E-Mini S&P 500 future. It starts overnight on the Thursday night from the close Thursday afternoon. Thursday night, you can see it's going nowhere fast, trading around 4,314. We have a bit of a spike at 2 a.m. Eastern time. But then it all settles back down again. And then in the hour before the data was released, it goes into a tiny little triangle. You can see that there, rectangle, within at the middle of a much larger triangle. And the skittish ones sent it up above the rectangle and then walloped it back down again. And then the other skittish lot sent it to close below the rectangle, but it managed to hold at the top of the cloud. In other words, we're still very much at the center of a holding pattern that has held for a little while. Moving on to my second chart, this is also a 5-minute chart, but it's the hour after the data release. So you can see we started off inside the middle of that large triangle, symmetrical triangle. You could see that little rectangle that we had there and that first candle that held at the cloud. For the next 15 minutes, the top of the cloud managed to hold the downside. Then we had another bit of a wobble, which dipped below the bottom of the cloud, but managed to hold above the lower edge of the triangle. And then whoosh, we went right up as people made up their minds that this data was bullish. And volume at the bottom, you can see the massive difference in those 5 minutes after the data release as compared to what we'd had overnight. So a whoosh. That is a great big Marabuzu candle that shows a complete sort of change in attitude. We then subsequently consolidated in a triangle during which volume decreased. And what we've got there is a pennant, and the pennant is centered around the 4,323 level. So in other words, in all of this non-farm data, we've managed to pick up 10 points on the index. Everything on this chart suggests up further. And then my final chart, I waited to the close of business on Friday in Chicago, and it's a daily chart. And you can see that we actually settled at a new record high above the top of the Bollinger Band. On the RSI, we're overbought at nearly 72, and volatility has actually dropped because it's a one-way street. The important thing here is that on the index itself, we had 7 consecutive daily closes higher. There's a rule of 8-10 which says any market that goes in one direction only for that amount of intervals is extended and due a correction. This one has actually traded higher 10 consecutive bullish stroke neutral days. So you can see, so this one's at 10, the index itself is at 7, which was the first time this has happened since 1997. So I hope this is of help, particularly to those new to technical analysis. Good luck, and I'll come up with something interesting for you next week. Take care.